Okay, picture this. You're going through your mail and you see it, a letter from the IRS. Your heart kind of drops, right? You open it up and it's a CP 2000 notice saying you owe thousands and thousands of dollars in unpaid taxes from your postdoc fellowship. Now, this isn't just some scary story. For a lot of postdocs, it's a real nightmare called the fellowship audit. And it all happens because of a fundamental misunderstanding of what you actually do as a researcher. But don't you worry, we're going to break down exactly why this happens and, more importantly, arm you with exactly what you need to fight back.
And this is the number right at the center of the whole mess, 15.3%. So what is it? That's the self-employment tax rate, for Social Security and Medicare. What happens is an IRS computer sees your fellowship income reported on the wrong form, and it just assumes you're running a business. So it automatically slaps this 15.3% tax on top of the regular income tax you've probably already paid.
And that really gets to the heart of it, right? You see yourself as a trainee, you're advancing your education, you're contributing to science. But does the IRS see you as an independent contractor? Like a one-person business selling your research skills? The answer to that question is everything, because it determines whether that 15.3% tax is a legitimate expense or just a very costly mistake you need to get fixed. So here's how we're going to tackle this. We'll break it down into 6 parts. First, we'll look at the problem itself, the dreaded fellowship audit. Then we'll get into the key legal difference between a grant and a wage. After that, I'll introduce you to your secret weapon, the Spiegelman case. We'll walk through the tax forms that cause all the trouble, lay out a battle plan for defending yourself, and then wrap up with the key takeaways you need to remember. All right, first up, the fellowship audit. Now, when you hear the word audit, you might be picturing some agent grilling you under a bright light. But honestly, that's not really what this is. Most of the time, it's just an automated notice that shows up in your mailbox proposing this huge, out-of-the-blue tax bill. The main culprit here is usually a notice called the CP 2000. It's spit out by an IRS computer system. And here's what the computer sees. It sees that your university reported your stipend on, say, a 1099 NEC form. But it doesn't see a corresponding business income form on your tax return. So the computer's logic is, oh, they must have forgotten. And it helpfully generates that business form for you and then sends you the bill for that 15.3% self-employment tax. So why does this computer error even happen? I mean, how does this get so mixed up? To understand that, we have to dig into the root of the conflict. And it all boils down to the legal difference between a grant that's for your training and a wage that's paid for your services. The key legal test here is a Latin phrase, quid pro quo. It literally means something for something. In tax law, it's all about whether there was an exchange. If a payment is made in exchange for your services, for specific work that primarily benefits your university, then it's considered wages. And this isn't just some vague idea. It's right there in Internal Revenue Code Section 117. If there's a quid pro quo, employment taxes apply. Simple as that. In this slide, this really lays out the 2 different worlds that postdocs live in. On the left, you've got your employee postdoc. They're probably funded by something like an R01 grant. They get a W-2 form because they're being paid for services. That's a clear quid pro quo. But then on the right, you have the fellowship postdoc. You're a trainee, funded by something like an NIH T32 or F32 award. Your payment is a stipend for your training and living expenses. And the key thing is, there is no quid pro quo. You are not an employee. The way courts figure this out is by using something called the primary benefit test. They just ask a simple question. Who's the main person benefiting here? If the research is really meant to serve the university's mission or hit some sponsors' goals, well, the primary benefit is for the grantor. That makes the payment compensation. But, and this is the important part, if the research is primarily to advance your own education and training, and the university just gets some nice benefits on the side, then the primary benefit is for you, the recipient. For true training grants like an NIH NRSA, the law is totally clear. The whole point is for you to benefit. Okay, so this brings us to the single most important tool in your entire arsenal. Let's talk about your legal shield, a landmark tax court case from 1994 that gives you the exact legal precedent you need to protect yourself. The case is Spiegelman v. Commissioner. The guy's name was Dr. Michel Spiegelman, and he was a postdoc at Columbia. The university gave him a Form 1099 MISC for his fellowship income. Now, he did the right thing, he reported it as income, but he did not pay self-employment tax on it. So the IRS came after him, arguing that his research was a trade or business and that he owed them the tax. The whole thing went to court, and in 1994, the court sided completely with Dr. Spiegelman.
And the court's reasoning was absolutely critical. They said that to be in a trade or business, you have to be, and this is the direct quote, holding oneself out to others as engaged in the selling of goods or services. A research fellow just isn't doing that. You're not hanging up a shingle and selling your services on the open market. You're engaged in training. The court basically said the grant money wasn't a commercial payment, it was more like a gift to support your scholarly work. And that, right there, is why the Spiegelman case is so powerful. It's your shield. It establishes in a court of law that a true academic fellowship, where the main goal is training, is not a trade or business, and because of that, your stipend is not subject to self-employment tax. And this is huge. This is true no matter what form your university mistakenly sends you. The legal precedent trumps the paperwork. All right, so we've got this great legal shield. But how does this all get so messed up in the real world? Let's talk about how this legal theory collides with the total maze of modern tax forms and software. The biggest problem today is a form called the 1099 NEC. That NEC stands for non-employee compensation. A lot of university payroll departments just don't have a button for trainee, so they default to this form. And to an IRS computer, a 1099 NEC is like a giant, flashing neon sign that says self-employed business owner right here. So here's exactly how the trap gets sprung. You get that 1099 NEC in the mail, you sit down with your tax software, and you plug in the numbers from the form. The software, which is built for freelancers and contractors, sees non-employee compensation and immediately shunts that income over to a Schedule C, the form for business profit and loss. And the second it lands on Schedule C, bam, the software automatically calculates and adds that 15.3% self-employment tax to your bill. So, what's the right way to do this? You have to bypass the software's trap. You need to report your taxable fellowship income on Schedule 1 of your main 1040 tax form. You're looking for the line for scholarship and fellowship grants not reported on Form W-2. In recent years, that's been line 8R. This puts the income in the right category and, most importantly, keeps it away from Schedule C. Now, let me be perfectly clear about something. This is not about trying to avoid income tax. As a postdoc, you're not a degree candidate, so your entire stipend is pretty much always considered taxable income. You owe income tax on it. This entire fight is only about avoiding that extra 15.3% self-employment tax that you do not legally owe. Okay, so let's say the worst happens. That dreaded CP 2000 notice lands in your mailbox. What do you actually do? Let's build your action plan, step by step. First things first, do not panic. Seriously, this is a common, fixable problem. You're going to write a formal response letter back to the IRS. In that letter, you're going to clearly state that you disagree with their proposed changes. You'll explain that the income was a non-compensatory fellowship grant for training and that there was no quid pro quo. And then, here's your silver bullet. You are going to cite your legal shield, Spiegelman v. Commissioner 102 TC 394. Finally, you're going to attach your proof. So, what kind of proof do you need? Let's make a checklist. First, dig up your original fellowship offer letter. Get a highlighter and mark every time it says stipend, training, or non-employee. Second, if you're on an NIH NRSA award, go online and print out the section from the NIH grants policy statement that literally says these stipends are not salaries. Then include a copy of the incorrect 1099 form they sent you, and finally, a copy of your tax return showing that you already reported the income correctly on Schedule 1. All right, let's wrap this all up with the key takeaways. The goal here isn't just to know how to react if you get audited, but to be prepared every single tax season so you can hopefully avoid it altogether. You know, this table really puts it all in one place. It all boils down to this. If you're an employee postdoc, you've got that quid pro quo relationship, you get a W-2, and your FICA taxes are withheld. Simple. But if you're a fellowship postdoc, you're a trainee. You might get a whole mess of confusing forms, or maybe none at all. But the key is you are exempt from self-employment tax, and your ultimate defense is Spiegelman versus Commissioner. Knowing which of these two columns you fall into, well, that's the whole ballgame. And that leaves us with one final, really important question you need to ask yourself. The root of this entire mess is almost always a disconnect between the legal reality of your fellowship and the way your university's administration handles the paperwork. So you need to be proactive. Look into your own situation. Are they classifying you correctly? Because understanding your true status as a trainee isn't just some academic detail. It's your absolute best defense.